Let's also welcome in Chakri Lokapriya, Managing Director at TCG Asset Management. He's joining us in the studios this morning. Chakri, thanks very much for taking out the time.
Morning.
Lots has been happening. Yesterday the focus stayed on Infosys. Now we've got some big numbers that have come out from the NBFC space as well. You have Bajaj Finserv, Bajaj Finance coming out, private sector banks, a clear trend amongst all of them, using additional tax savings to prop up their provisioning numbers. RBL Bank expected to be a no-show and turned out to be a no-show. But how have you been reading into all these earnings that have been coming up?
I think the earnings, clearly the troubled banks are still troubled, the good banks are recovering. I think that trend is going to continue for quite some time now. So as we've seen in the case of RBL, there is an increase in stress book assets. It trades at about 1.4, 1.5 times. The question to ask is, why would you give that kind of multiple for where an asset quality is falling? So against that environment, I think banks like that will continue to see a weakening and a de-rating of their valuation. On the other hand, you'll see Axis Bank, ICICI Bank, which are showing improving numbers. We'll see a kind of a re-rating to their multiples.
I actually wanted to ask this because I asked on Twitter as well. I think at the end of quarter two, the book value per share that they've declared is sub 200, if I'm not wrong. Now, what kind of premium or what kind of book value on an annual basis, of course, would you assign to, say, a name like RBL, wherein the quarter is okay, but the future seems a bit uncertain?
I guess there are two things. One is the book, the size of the book, and the quality of the book. Now, in the case of a bank like Yes Bank, where the quality of the book is fairly uncertain, how it will pan out over the next year or two. And that also seems to be the trend in the case of RBL, in terms of, there is a continuing fall or the continuing increase in slippages. So from that perspective, it contributes, therefore, lower profits, therefore lower ROE, lower accretion to the book value, and then pulls down the multiple. And the opposite holds true in the case of when there is a reduction in slippages. So I think that's the way we're approaching. And so as you're seeing asset quality improve for like an Axis of the world, we would therefore assign a slightly higher multiple.
Okay. What did you make out of Infosys? And not just talk about the stock, but obviously, this has happened in the past, and at that time, people found value once the stock came off from those levels, and then pushed right back to where it was trading at just before this event yesterday. Is this still a stock that needs space in the portfolio?
Yes, indeed. I think what's happened, if it's happened, is probably an accounting issue. And an accounting issue, and sometimes companies do aggressive accountings, which is not a great thing. And you've seen that fall, and I think there will be course correction if indeed that is true, if the audit committee finds evidence of that. But outside of that, there might be some changes as a result of the management, which is a good thing that, you still have an organization, a bellwether, a system which is strong enough, which is able to pick things fairly early and bring it to light, rather than it to fester and become a larger thing.
So you don't foresee a valuation de-rating further?
And also, do you see the focus shifting towards the likes of a TCS now?
Valuation de-rating, well, from the last time, it happened for a different issue under the previous CEO. The valuations fell further. I think it kind of bottomed out at about 12, 13 times. It's still trading at about 18 times. So can it go down to 13 times? If something negative comes out in the audit committee report, yes. But if I would suspect that if it was largely an upfronting of revenue of existing contracts, then it's a margin issue. While it's not really a good thing, but there'll be some amount of de-rating, but I think it was trading at 16 times a year ago. So maybe that is the new multiple in the near future.
The only thing is I hear so many people on social media saying, hey, Infosys is not a Satyam, so don't do this. I'm saying no, the market right now in its punishment to Infosys stock is not treating it the way it treated a Satyam or some of the other scams. This is just a natural course correction to an event that has happened. And if it all comes out okay, then there's nothing that stops the stock from regaining some of the lost P multiple as well.
In this last 1 year itself, we've heard so many cases. Obviously not cases like such big companies like Infosys, but the smaller names and corporate governance issues have been punished.
Yeah, I mean, again, I don't remains to be seen. Let's see. And whether, but today's stock price move is an indication, Devina, that the market is not completely convinced, because at the end of the pre-open session, it looks like Infosys will start off another 2% lower after the big cut that it had in trade yesterday. So let's wait and watch. The other question, Chakri, and quick thoughts here, is whether you are convinced about the PSU names now, because the last few days, the divestment candidates are going up and gaining steam, despite a large portion of the market saying, no, we don't believe this because we don't know when this will happen. But PPCL, Shipping Corporation of India are all moving up.
Yes, indeed. I think, some of the divestment bet as far as the government is, there's a sense that it's realizing that what it did to an ONGC HPCL is not the right way to go about it. And in fact, I think there has been an admission by the government itself that, ONGC can go ahead and sell HPCL if it wants to. Against that backdrop, I think companies with a lower government stake and which are not so strategic. I mean, BHEL is not strategic anymore. And so from those kind of companies, you'd probably have easier candidates to sell.
Yeah, and the fact that up until now, most companies which have a steady ROC, have a steady ROE, are PSU companies, but they don't really attract that kind of attention from the investor community just by the backing of being backed by the government, and that's.
I think the problem is, if you look at Bharat Electronics, for instance, one of the reasons why the company derated was a restriction on their profit margins. They said government contracts, there's only so much margin that you could make, things like that. So a privatization completely allows a company to do free market pricing, and therefore a re-rating of the multiple. So if indeed all these companies are, go down that route, then there is a genuine case for re-rating of the multiple.
What's your view on housing finance companies, Chakri? I mean, obviously, Indiabulls left alone. You can comment on that also if you want. But just in general, while specific pockets within the NBFC space are gaining traction, housing finance seems to be in the doldrums a bit.
Housing finance is a reflection of a poorer consumer sentiment and poorer consumer spending. So this is probably the biggest ticket item that a consumer can spend in terms of a housing EMI. So it's unlikely to, the loan growth rates are unlikely to pick up anytime soon, at least for the next 2 or 3 quarters in the case of housing companies. Yes, RBI is expected to cut rates, and given that most of the loans are made on floating rates in this country, the EMIs will be lower for fresh loans. So that will be a real trigger, but that's probably a good many months away.
Okay.
Quickly, Chakri, on Asian Paints or the paints companies so far, they've had a stellar run till now, but do you feel that could continue?
The only game left in town is Asian Paints, Berger Paints, and Kansai Nerolac, and they're taking away market share from the unorganized players. And I think that's a trend that you will continue to see. And so from that, yes, the valuations are high. So from that perspective, they'll probably tread water, but not much of downside.
Okay, that's on Asian Paints and Berger Paints. Remember, we'll wait and watch just what Berger does from last quarter to this quarter. Stock has gone up significantly.
Chakri, let's end this conversation on a good note. There are a bunch of stocks hitting fresh highs, and some consumer names which you don't even hear. As I said, Amrut Anjan, Westlife, Blue Star is at new highs too. Any thoughts on those? Or if not, any of these Adani Group stocks which are hitting fresh highs almost every second day?
The market in general, the broader market, after the last several months, is trading at multi-year lows. We've looked at several stocks which are actually trading at 2008 lows.
Okay.
And so from that perspective, so clearly what is this whole thing about, the flight to safety, move to large cap has happened, and within large cap, a bunch of names is what people have invested in. So I think it's clearly time to start looking at some of these companies, good franchises, where demand has been the question. It's not the company financials. So from that perspective, I would start looking at the broader market, the good, strong companies.
Okay, Chakri Lokapriya, I take a moment to thank you for joining in today, and festive greetings to you and everybody in your team.
Thank you, and happy Diwali.
Happy Diwali.
Thank you so much.